So the market's down today, right? Big time. 5% total markets on average, up or down, whatever. But good that it's down. Some people are nervous. Some people are scared. I was, talking to folks this week and they're like, oh, the market sucks, this and that. Good. The market should suck. Why? Because it was so overinflated for so long, it didn't make sense. And every time that does that, right, back in, say, 1999, 2000, with the public markets, what about 2007, 2008, 2009 with real estate? When the markets don't make sense, a crash or a big disruption is inevitable, and it's healthy. This needed it. The best thing the market could do is this year is nothing. At the end of the year, up, down, and it's totally even, because what happens if earnings continue to grow, which again, that's a question mark, but if earnings continue to grow, then valuations will look better. Right now, valuations were so stretched that any news at all would disrupt the market, and rightfully so. So this is a good thing. If you're a long-term investor, if you're 70, 75, if you're not working, if you're on a strict budget, right? If you were fully invested without being strategic and tactical about your cash flow, then yes, you're going to be hurting. And yes, if we go into a 1 or 2 year downturn in your retirement age, it will disrupt your retirement and your cash flow and your overall quality of life. Yes, that is the danger of these type of major disruptions. But if you're anything in your 20s, 30s, 40s, 50s, and even 60s, early 60s, and you're still working, and you had a diversified portfolio, you're looking for these opportunities of these downturns. Again, the NASDAQ was down, 80% in the last, major recession. What are we seeing today? 4 or 5%, maybe 10, 15% year to date. If it shows anything like the past, we might have a long way to go if we go into some type of recession or depression. So the bottom line is these opportunities, these are opportunities. These setbacks, these pullbacks are opportunities. Look at them as opportunities. As long as you're bringing in cash flow, as long as you have some cash or dry powder, put more money to work gradually, cost average down, and you'll be in a much, much better position 12, 24, 36 months from now than you are today. That's how you have to look at it. You can't be scared. You have to be excited. You appreciate the upside and you get excited about the downside, so it gives you opportunities. And guess what? Diversified. Make sure depending if you're a accredited investor, if you can have access to hedge funds or private equity real estate deals. Think outside the box. Remember, there are opportunities now in real estate, because if interest rates, again, it's a question, but assuming and playing the odds that interest rates will be lower 24 months from now than they are today. So if interest rates are lower, that could add some, win to your sale when it comes to appreciation of your assets. So depending on the real estate deal and what the structure is, just think outside the box. Don't get nervous. Get excited when these downturns, don't make emotional based decisions. Put more money to work thoughtfully, and you'll be just fine.